All right, so we'll give everybody another minute or two. And while we do that, I just want to welcome everybody. This is our first session of our Financial Foundations for Interior Designers series that we put together. This first one is going to be about pricing and profitability. Our next one's going to be about invoicing and accepting payments. And then the third one's going to be about ordering and order tracking and how to do that efficiently. So I hope to see everybody at the next two and appreciate everybody for joining this one. Um, while we get started, I'll just go ahead and kind of give everyone a little bit about myself and my background. So my undergrad degree is in finance and a minor in accounting. And then I went to back to school to get my MBA and focused in finance. And then out of school, I spent the first part of my career as a cost accountant in the really fancy field of industrial construction. So I spent most of my time on site in Dresden, Ohio, building a natural gas power plant. So anybody familiar with Dresden? It's the, already not familiar with Dresden, it's the location of the world's largest Longenberger woven wooden basket. So that's their claim to fame. And so after that, I worked at Dell Computers for a bit. And then after that, I worked in a outsourced accounting firm where we did the finances for about 2,000 startups and small businesses. So what that entailed was me working with a portfolio of our customers, closing their books every month, working with them about understanding their finances and how to manage them. So there's a lot of parallels here. And whenever I came onto Materio about a year ago, part of my goal was to help up-level Materio and Materio's customers in the financial area. So we found that a lot of folks were asking questions about the financial side of the house, and we thought that'd be fun to put something together. So what we're going to do is this first one on the foundations. And the reason that we want to start with the foundations is because um, a lot of folks feel like that's a little complicated. And when I talk to people in chats and on their onboarding calls, they just don't really like to deal with that stuff, and their brains work in a way where it's very visual and designing spaces, and that comes naturally. And so my brain kind of works in the opposite way, where I'm not really good at designing stuff or graphics or anything like that. And Mary Beth can attest to helping me with these slides today. Before she helped, there was a bunch of numbers and spreadsheets and charts, and she thought that might scare people. So trying to meet in the middle with less numbers and more visuals. And we want to let you know that not only can you understand these concepts, but you can make money and run your business and follow your passion in interior design and do it in a really effective way. So I'll just pause there. I want to introduce Mary Beth. Really excited that she took the time to be on this call today. She is one of the co-founders of Materio. You've probably heard her name or seen her or talked to her. But I want to introduce her. I'd like to hear, Mary Beth, what are you excited about today? What are you interested in learning? And
Yeah,
say
thanks,
hello.
Cale. Hi. I feel like I'm really excited that we're doing a series on financial foundations, and I think one of the reasons this was one of the first webinars we wanted to do was because we genuinely care about your financial success. So it's not just running your projects smoothly, it's kind of figuring out all of the finance elements and how we at Materio can make that better for you. We don't always win at that. We don't win at everything, but we're hoping to be better at that. And we have Cale on our team, and he has these amazing expertise in this area. And I think that he can take us down to a really basic level to kind of think about some things that maybe we don't think about as we're running our business. So yeah, I'm just super excited. And I think also one thing I will say, I'm kind of the MC here, if you will. If you have questions as Cale is going through this, drop them in the chat. I will kind of queue up some questions. If it feels relevant to what he's talking about before he moves on, I'll interrupt and we'll get him to kind of dive into it or answer. And then we are going to have a live Q&A at the end where you can unmute. And if you do come up with a question also that you want to say out loud towards the end, just use the reaction button and you can raise your hand. And that way we know that you have a question. So let's take it away, Cale.
All right, thanks. Let's just dive in. So what we're going to cover today are going to be the building blocks of accounting, some of the terms you may have heard before or seen before, but may not know exactly what they mean. And we're going to talk about how you can use those objects or those terms and definitions to really energize your business and make it more profitable. And then we're going to talk about how that relates to pricing and different methodologies and combinations of methodologies that you can use. And then we're going to talk about cost. A lot of folks don't consider everything that comes out of their checking account or their credit card as a cost to a project or their business. Kind of just like, it's part of doing business. But we really need to figure all that stuff in. And then we're going to talk about best practices, kind of get down to the tactical things that we can take away from this call and like put into practice. And then as Mary Beth said, we're going to go into a live Q&A. All right, so not to get too nerdy on everybody, but in accounting, there's a pretty basic principle. A lot of folks probably already know it, but profit is taking your revenue, means all the money that you make, and then subtracting the cost, everything that it takes to run a project or run your business. And at the end of the day, what's left over is your profit. You can see here in this little example, there's the cost to purchase an item, and then there's ancillary costs, such as shipping and sales tax, and then the little bit on top, that's your profit. So we're going to kind of dive into a little more nuanced areas of these concepts. And so next, we're going to jump into costs. And so here we want to think about the different the costs that go into your business and how that relates to profit. So not only do we have gross profit, you sold a $100 lamp and it cost you $80. That's your gross profit. Then there's operating profit, and that takes into account your overhead. And these are things like rent, payroll, all the software that you use, all the coffee meetings that you entertain clients with, any travel. These all add up, and then that gives you your operating profit. And then once you pay your taxes, that's your net profit. So there's a lot of things that go into each phase of getting from gross profit to operating profit to net profit. So we want to make sure that you're aware of that and don't fail to see that there's a lot of things at play here, and you can really get burned if you don't take those into account, or you start putting things on your personal card instead of your business card. That's really going to impact you at the end of the day. And so what you can do is three things that are in your control. We can increase revenue, aka sales. We can increase our markups and then what we make on top of what we sell. And then we can drive down cost. Once we know about all the costs, maybe we can eliminate some. Maybe we can renegotiate some things. Maybe we can get some stuff trimmed down. Doing these three things will help you build a more profitable business at the end of the day. Again, these are really basic concepts, but a lot of times we just don't stop and think about them and go through the actions to make it happen. So I think one thing I'd like to hear or people to chat in about is like, what are some costs that maybe like you forgot about, or that you forgot about in the past that you remember to take into account and found and like save some money on. All right, and so the number one question that we get in our chat, and that I hear on my onboarding calls and my customer calls, are related to margin and markup. And it's oftentimes, well, my markup is 100%. Why isn't my margin 100%? Those are two related things. and they go hand in hand, but they're different equations. So margin is the amount of profit that you made after selling something. So it cost you $80 to buy, you sold it for $100. The difference, that $20, that's your profit. The markup is related to the cost. So if you bought something for $100 and you want to make a 50%, have a 50% markup, that's going to be a selling price of $150. So that's going to be your markup, and it's based on the cost. And the way that I remember the difference between margin and markup is that markup has the k sound and cost has the k sound. So margin is related to the selling price and markup is related to the cost. And additionally, margin can be on an item. It can be on the electrical section of your project. It can be on the kitchen area of your project. You have margin on your project as a whole. And then you have margin on your business, where it doesn't make sense to think of markup along those terms because it doesn't scale like margin does. So margin allows us to look at profitability at different levels of the business. And so that gives us a way to kind of equalize and make sure that we're profitable along the way, where markup is more tactical and more related to how we set our prices. And so an example of that is $100 land. Let's say that you went 30 minutes down the road to an estate sale. You bought this really cool antique $100 lamp. You marked it up 100%, sold it for $200, and you made $100. And you'll notice that it's in quotations here because there's a lot more to the story than just the markup here. So in reality, you drove 30 minutes. That is a cost to you. Your time is a cost. You have value, not only as a person, but as a business, and your time is super valuable. The gas that you use to get to the estate sale and back is valuable. The time that you spent there is valuable. So if you think about it in a zoomed back way, you actually spent $375 on that lamp and sold it for $200. So you're underwater by $170 and negative 87.5% margin. So here's where the fallacy of only looking at markup and the cost of the item itself or the service itself can really bite you. And that's what we want everyone to kind of like take a step back and realize is that we need to have a holistic view and a very strategic mindset when thinking about pricing and profitability. Another way to look at it is we've got Schmidt's Creek's interiors here, our Q1. We had 3 projects. One was 25K, one was 40K, one was 35K. So that all adds up to 100K of revenue. Well, if we marked up our cost of goods sold and our services by 53%, that gives us 35% profit margin. We made 35K. But once we factor in our overhead, which is our operating expenses, we're down to 20% in our operating profit. And then once we figure out that we owe taxes, then that's down to 17%. So what we want to illustrate here is a 35% profit margin on all of your projects translates to a way lower net profit. And that's what we want to help you avoid, because once you start increasing your profit and your profitability, you can start hiring more people. You can start pumping more money into online advertising and start paying like graphic designers to do your ads and really start snowballing and create that flywheel effect of getting more clients, getting those higher level clients. Another way to look at it is, let's say you have this project and you have a design assistant and a senior designer working on it with you, and you bought a $500 chair and sold it for $1,000. At the macro level, you made $500 on that chair, but did we pay shipping and some receiving costs for that chair? Did we pay a design assistant to spend 5 hours sourcing on that chair, we're left with just a sliver of profit after that. So what can happen is we can get lost in the sauce, so to speak, and just kind of lose out on like, yeah, we made $500, but really like we need to think about different things that go into all the costs. So what we can do is we can maximize the methodologies that we use. And by methodologies, we have a bunch of different options here. You've probably seen most, if not all of these. Markup is one of the most common ones. You know, you bought a lamp for $100 and you sold it for $200. That's a $100 markup. You can do a flat fee where you charge $5,000 for X, Y, and Z in the scope of work, and everything else is either client sourced or just a pass-through cost to the customer, or use the customer's credit card to source everything. You can use hourly billing. That's one of the safest ways to make sure you don't get burned. That's where you want to make sure you have the right cost rate associated with yourself and a really good billable rate, so you know exactly how much money you're making. The next is very similar, is the retainer, where you take a chunk of money up front and then bill against that retainer, and then either do another retainer after that once it's exhausted, or you do hourly billing after that. Another is price per square foot. We don't see this as much in our customer base, or percentage of project. Those are pretty simple, just taking the square footage times $100, or taking the percent of the project. So if it's a 100K project, you charge 30%, you get 30K, and whatever's in that is in that, and you want to keep track of your costs. But what we see most often is a hybrid model where we're using product markup, we're using hourly billing, where we have fees for different stages of the design phases. And we really see that be a successful way to maximize your level of profitability, because at the end of the day, like, you're limited to the level of markup you can do. But if you choose to add like an hourly fee or another design package fee on top of that, you can really boost those net profit margins. One thing that a lot of folks say whenever I'm working with them is that I don't have a cost rate. I'm the owner of this business. You know, I don't pay myself. You know, I just take what's left over in the day. Well, that's not the right way to think of it. You do have a cost rate. Like, you want to earn a set level. I hope you want to earn your set level and go way beyond that. So what we have done here, and this is a really common way to figure this out, is in this green column here, that's the salary plus benefits level of a person, yourself included. Can be you can pick where you want to be there. So for example, if you are paying a design assistant 60K with their salary plus benefits, what you can do is take the number of hours that they work per year, which a typical year has 52 weeks and 40 hours per week. So that equals 2,080 hours. So the simple math is 60K divided by 2080. That's $29 an hour. That's the cost rate. It's simple as that. And we can share this with you. We will share this with you after our call, and it'll help you set your cost rates. And then for the billable rate, is you just build off that. You can do the market rate. You know, if you're really tuned in to your market and what other folks are charging, you know, we want to make sure that you do that or above that. What you can do also is understand where you're at as far as the profit margin per hour. If you do 150%, 200%, 250%, that's all that means is 1.5x, 2x. So $29 an hour times 1.5 is 43, times 2 is 58, times 2.5 is 72, times 3 is 87. So you can use this matrix to figure out what your cost rate is, to keep track of how valuable your time is, and then what to bill your client and where that falls in your profit margin. So at the end of the day, if you're using a hybrid model of product markup and billable rates, you get that blended profit margin at the end of the day. At the end of the day, that's going to drive your profitability up. So I know the folks that I talk to on a daily basis are doing that, but I'm wondering if anybody in the chat wants to say if they're using multiple billing methodologies or what they find to be most useful.
We do
Next,
have some responses in here, Cale, by the way. We got flat fee, percentage of the job, flat fee. And we do have one question maybe we can, that just came in. How do you determine the overhead cost plus employee salary to determine a billable cost per employee?
yeah, that's a great question. So what you can do is we have a billable rates matrix that we just looked at. So you can use that. And then what you can do is if you have your past financials, is take a look at everything under your gross margin line. And there's an operating expense section of your profit and loss of your income statement. So you take that and you divide it by the number of employees that you have, yourself included, and that is your overhead per employee. And what we can share that equation after this call as well. So basically, you just figure out how much your operating costs are, your overhead costs are. You divide that per person, and you can add that to the amount of their cost rate. So the tactical part of this is know your cost rate. Like never put yourself as $0 cost per hour. That is just not true. You wouldn't pay somebody $0 an hour. If you had to pay somebody to do your job, it's going to cost you X amount. And so that's another way to think about it. You are definitely have value and you want to keep track of that cost. And we want you to make sure you don't underprice yourself. We often hear that higher prices equal higher budgets and higher affluent clients. We want to make sure that you track how your time is spent. I've talked to several accountants and they say that a lot of their clients just never keep track of their travel time and they really lose out on a lot of revenue because they think like that's just part of doing business. Another thing is always include a project level fee, like always charge a management fee or charge a sourcing fee or charge a warehousing fee. We can add that down to the bottom of the project as an additional fee. So that's just like some extra gravy on top. Our most successful clients have standard operating procedures. They are very detailed and they're very executable. So in every phase of the project, there are X amount of tasks, and those tasks need to be done in this order, and that's the most efficient way to run the project. So always have ways to replicate good behaviors. Get a contract signed up front that has explicitly states what is included with your design package. Be very transparent with your client and set expectations that, hey, we're going to do this. Anything outside of that, I'll let you know what that costs. Never like do favors because the client's not going to do you any favors. So always consider the complexity of the project. If the client wants to source everything themselves or they want to have the builder source things and them source things, say, hey, like this is getting really messy. If you want me to take care of all this in an organized way, like we're gonna have to figure out what that's gonna cost. Like don't do work for free. Hire an accountant or fractional CFO. So we have several accountants that we work very closely with. I talk to them on a weekly basis. We have fractional CFOs that we work with. So difference between an accountant and a fractional CFO is a CFO is going to be more strategic and like forward thinking, where your accountant is going to be more practical and backwards looking, like looking at your historicals and how you did in the past. And they'll give you some advice and best practices, but the CFO will kind of be more strategic and how to like, well, you really did well in kitchens. So why don't you really like put your focus in kitchens? Because these areas are not doing so well. And then review your profit and loss statement on a monthly basis. So you can do that with your accountant. If you're familiar with QuickBooks, you can do that with your do that with you and your team. I'm happy to show you how to pull that report if you're unfamiliar with it. There's lots of resources online as well on what the different parts of the profit and loss, also known as the income statement, mean. And then something that we just rolled out this week from Materio is we're doing annual plans now. So if you want a discount on your Materio subscription, you can change from monthly to annual, and our annual plans are discounted in a way that you get 2 months free. So that's another way and you can save some money. All right, so that takes us to the end of our planned programming. We can have a little time for live Q&A. We're getting close to the half-hour mark, but we can stay over a little bit if anybody has questions. I can answer, Mary Beth can answer. If you have any comments, questions, we're happy to chat.
Thanks, Cale. I don't have anybody with their hands raised right now. I would say if you don't have questions, also we're totally down for feedback. Oh, Joby, we've got a question. All right, you can unmute yourself.
Hi. So I've done so I'm also an architect, and I've been in groups about the business of architecture, because a lot of us are great designers, but we're not business people, but a lot of us are small shops. And I just wanted to share one of the things that changed my view of money, because I always sort of had this ambient idea, I'm financially fine, but just the simple thing of going into my business checking account and making multiple accounts, operating taxes and then profit, so that every time I get paid, I took it out and put it into those, and then just seeing that change in number of my operable expenses was really sobering and humbling. And that made a world of difference for me. It's still always constantly trying to get a handle on it, because no year is the same in this industry. No project's the same. It's not a copy paste thing, but just seeing that number in those forms really was eye-opening.
I love that. Thank you for sharing. All right, we have Naomi.
Yeah, what's the difference between a fractional CFO and a regular CFO? Why do you call it a fractional? Is this like a hired gun CFO, or instead of a full-time employee?
Yeah, great question. So we call it a fractional CFO because they are contractual. You pay them as you need them, or the engagement is not like a full-time employee. So it's typically an easier way to get some really strategic advice rather than jumping in and hiring somebody that's full-time.
Yeah, if we're in this seminar, we can't afford a full-time CFO.
Yeah, that makes a lot of sense.
Okay.
Yeah, and I've got a couple fractional CFOs that I've talked to in the past that I can share with you if you'd like.
Okay.
Also, we just had someone in the chat ask about what does SOP stand for? So that is for standard operating procedures. Sometimes at Materio, we also call those playbooks. And so I think one thing I'll share while we're here and we're kind of talking about SOPs, that's really beneficial for your business, because like Cale said, if you can do something once and it's a good method for doing it, you want to have it be repeatable. And so one trick I like to do for internal SOPs at Materio is when I'm doing something, let's say I'm building a slide deck for a webinar or something, I'm going to film myself doing that using a tool called Loom, or you can use any screencasting tool, but Loom is great because it gives you a transcript at the end. So I will film myself doing that activity, specifically if it's on my computer. So if we are, let's say we're making changes to a plan and we want to export it in a specific way, there might be an SOP at your practice around that. And so you would record yourself 3 times doing that task. And then by the 3rd time, you've probably covered all of the edge cases that you might see in that task. And you can take the transcript from Loom and throw it into AI or ChatGPT and say, hey, write me a standard operating procedure for exporting plans from, chief architect in this certain way. And so it will give you those procedures, and you can kind of build out just a book of those, right? Maybe a digital book in Google Docs, but this allows you to have very consistent processes, and that makes your team more efficient, which, as we just learned, is all going to play into the cost of your business. So if you can make your team really, really efficient and do things, and maybe you bring on a new person, but it doesn't take you 6 months to onboard them, it takes one, that can be really effective for making sure that they hit the ground running and ultimately, you know, are successful. So I just thought I'd share that. Okay, awesome. We are at past the half hour, so if anybody needs to leave, Naomi, your hand is still up. Do you have another question, or no? Good. Okay. Any other questions before we wrap this up? And hopefully you all enjoyed this. And if you have feedback, please email it to us. We'd love to know. Hopefully you can join us for the next session as well. We are, like everything, we're always open to feedback on these types of things. So let us know.
Thank you.
Yeah, Cale, anything else? You good? We're all
No,
good.
just to say, thanks for joining, and hope to see you on our next one in a couple weeks.
Thanks a lot.
Bye, y'all.
Thanks.